Everybody, we're going to be looking at fair value gaps in more detail, and we're going to be talking about reclaiming fair value gaps or reclaimed fair value gaps, also known as inverse fair value gaps. And this is the process of basically flipping a fair value gap and holding it as support or resistance on the opposite side. I only use this in a very specific context. So it must come after a draw on liquidity. Okay. It must absolutely only ever come after a draw on liquidity. And it works best when it is the only or one of the only available POIs. Of course, you can stack it, but it works best when it is one of the only POIs. I strongly suggest that you guys go and you test this out yourselves to better understand this. Don't just take my word for it. You may or you may not include this in your own trading period, right? So you don't take my word for it. Go test it, go understand it, and it may help you out. So here we have a fair value gap, of course. We know the wicks do not touch, so we have a fair value gap in the middle. We have a draw on liquidity. Now what we're looking for is to see if price will come up above this region, retest it, hold it as support, and break above, right? And continue to push above. So a fair value gap, as we expected, is that price will come into it and then push down lower, continuing that bearish order flow. But after we've hit a draw on liquidity, that bearish order flow ends. So how can we get an early signal that the bearish order flow has ended? Of course, we can get on a lower time frame, look for an SMB and continuation, but on a medium time frame or a higher time frame, we can also pair in the failure of an FVG and then a hold of that area as a support, right? So here we have an FVG, of course. When we come above it and close above it, so if I go like this here, this one candle, oops, we got one candle here, we got another candle here. And then we have the third candle here, right? Now let's make these two candles white. Black outline, okay. Okay, so now we have these two bullish candles that have ran through the FVG. So the first one didn't close, so there's no sense that this fair value gap is now broken or invalidated, whereas this one here has closed above, right? We've had a close above the FVG. Now this is looking to be a weak level, and what we can do here is look for a price to come back. It doesn't have to come back immediately. It can come back in the future, as long as we still have a draw on liquidity or a next likely draw on liquidity, right? Following our, as long as we're following our rules of consequential order flow. We can come back, look for that to hold support and take us to the draw on liquidity. I'll show you some real-time examples, of course. What this means is that this FVG is failing to do its job, and then institutions look to find support at this region to continue up higher, okay? There are residual buy orders in this region, which will act as support to push higher, okay? Reclaiming this region, right? This bearish region, reclaiming it as support, or on the opposite side, this otherwise bullish region in this FVG broken down and reclaiming it as resistance to push lower. And in many cases, this could be one of the easiest POIs to spot if you follow the rules, like it must come from a draw on liquidity and we must have a next likely draw, of course. This can be a very easy POI to look for, and it can also turn a wrong bias. If you're short in here, you get taken out, to be turned into a winning day and a correct bias for the day, because we're able to flip our bias and hold that as support. So similarly to a traditional support and resistance flip, right? Similar, but with FVGs, okay? And I'll show you some real examples here. Now, we would normally expect that an ISP would form in here to take us lower. When this breaks, we can then look to take this as support and form an ISP inside of that. So here we have a draw on liquidity. We have an SMB, and then we push back and we return to the type 1 range, and we're expecting that this is a pivot point, right? So the reclaimed FVG must come from an area that is an expected pivot point. So a draw on liquidity, or like a return to a type 1 that's coming from a draw on liquidity, right? It only is valuable if we're in an area where we expect price to start to roll over, right? If we don't expect price to roll over and this happens in the middle of the leg, then it's not so important. Now I'm going to go to the 15-minute here. And when we're looking here at this piece of price action, from the low to the high, we push down into it, leaving a fair value gap here. And then we push into the type 1, and we take basically all the liquidity available out of the leg. From here, we're left with an FVG. And of course, we would expect that this would hold as a form of resistance to push us back lower and continue that order flow. And then we see here that it doesn't. And this is where I took a trade, which you'll see in the trade recap, one of the trade recaps that I posted. But you can see here, we do not have a close above, so there's no inclination that this is not going to push us back lower. And then immediately after the next candle, we had a close above the FVG. And then immediately there, I look to see that this will hold as an area of support and push us up higher into the next draws, right? This was the one I was looking at. Now, what I did was I went on to the lower time frame to look and see if there was some form of support forming in this region, because after we've closed above, I'm already looking at this as not going bearish. So I'm immediately looking for the next buy side draw on liquidity, which is these equals up in here. Now on the 1 minute, you're going to see two examples of this. Here's that area. We sweep, form a type 1, push up, and then I'm looking at this entire type 1 region as the area of support that's inside of the reclaimed FVG, right? We've broken above that FVG, closed on the 15-minute right in here, and now we're reclaiming it as a support. And you can see right in here how crispy clear that region is, right? They're just perfectly respecting the 50% of that reclaimed FVG here on the 15-minute. Write that on here. And then inside of here, there's also another example of the exact same thing happening. Now, for me, this is a type 1, right? Because this is our system. And we're going to favor this form of analysis, which is that this sweeps liquidity, creates a type 1 and should hold. But also, if we look in here, this big bearish candle is an FVG, pushes down into liquidity. So following those same rules, pushes down into liquidity and then pushes up out of it. And then if we look at this FVG, you can see how beautifully this FVG is respected and why price wanted to not just react from here, but come down lower and react in this region to hold that as support. So just looking at another possible area of confluence as well to take a long. Now, for me, the type 1 was enough, and that's what I was looking at. But just on reviewing price now, in hindsight, I can see that there's also that inverse FVG. Back to the 15 minutes here. I also want to point out that inverse FVGs really come into handy when you do not have a very clear POI and it turns out to be the clear POI. Okay, so what do I mean by that? Here in this price action here on the 15-minute alone, we don't have an available FVG. We only have this one, right? There's nothing in here for price to come back to. So there's no reason for price to just randomly start to reverse here. There's nothing else to grab onto, right? So we look at this area as a support. Now on the 1 minute where we were looking at, there are multiple clearer POIs, right? We have the inverse FVG here, the reclaimed FVG, right? Reclaiming it as support, but we also have a much easier to spot FVG or easier to spot POI, which is the type 1, right? We have the type 1 sweeping ISP POI, right? All the same thing, order block, yada, 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 right? we've pushed down into liquidity, created a sweeping POI, and we're trading away from it. So this is the clearest one, which is also why I didn't bother to notice the inverse FVG, right? Because you only trade them when it is clearly the driving factor. So you're not going to see them too much, but I do suggest that if you do your research and you test this out and you find some examples of it and then log them as well.